Welcome to my Finance Gyan Plus YouTube channel. Today I have brought another problem related with financial ratio analysis. So let's see the problem here. So following informations are given to you from the balance sheet of KB Enterprises. Okay, this is the balance sheet information taken from the KB Enterprises. So here different informations are given here. So you can see cash in hand, cash at bank, prepaid expenses, receivable, inventory, accounts payable, accruals, notes payable, credit sales are given. A different information related with this KB enterprise is given here, and assume all sales are credit. So all sales which is given here, it's given credit sales. So here 360 days in a year, and you have to find current ratio, liquid ratio, receivable turnover ratio, inventory turnover ratio, average collection period. So this is the question. So if you like my videos, please like, share and subscribe, and also share with your friends. Okay, now let's see how to solve this problem. So here let's write first given. Okay, so given here, so cash in hand 25,000, cash at bank 50,000, prepaid expenses 10,000, receivable 60,000, inventory 30,000, accounts payable 50,000, accruals 10,000, notes payable 20,000, credit sales 2,75,000. So now let's calculate the current ratio. Solution A. Calculation of current ratio. So current ratio CR equal to current assets upon current liabilities. So your current asset, you have to find the value of current asset here. So here now working note, current assets equal to, so items related with current asset. Now let's see, cash in hand, cash at bank, prepaid expenses, receivable, inventory. These items are related with current asset. So now let's add these items to get the value of current asset. Cash in hand plus cash at bank plus prepaid expenses plus receivables plus inventory. So these are the items which you have to add. So cash in hand 25,000 plus cash at bank 50,000 plus prepaid expenses 10,000 plus receivable 60,000 plus inventory 30,000. So now total value 5,000 1,75,000 is the current asset. Now after finding current asset, you have to find current liabilities. Current liabilities. Here let's see the items of current liabilities here. Accounts payable, accrual, notes payable. These are current liabilities item. Now let's add this all. Account payable plus accruals plus notes payable. These are current liability items. So now let's add this. Accounts payable here 50,000 plus accruals 10,000 plus notes payable 20,000, total rupees 80,000. 80,000 is the current liabilities. Okay. Now let's put the value of current asset and current liability to find the current ratio. Okay. Now let's see. Current asset 1,75,000 upon 80,000. That will be 75,000. 2.18 is to 1. This is the current ratio for this KB Enterprises. Now second you have to find is liquid ratio. Okay, to find liquid ratio, now let's do again here. Liquid ratio. Liquid ratio here means it's a quick ratio. So you have to find the quick ratio. Liquid ratio, quick ratio, or acid test ratio, it means the same thing here. So calculation of liquid ratio QR, you can write QR. Before liquid ratio you can write LR also, but it is a quick ratio, so you can write QR also. So a quick ratio or liquid ratio equals to quick assets upon current liabilities. Let's find in working note. Quick assets equal to current asset minus inventory minus prepaid expenses. So prepaid expenses should be deducted from the current asset to find the quick asset. So here current asset is your 1,75,000 minus inventory. Here inventory is here 30,000 minus prepaid expenses here 10,000. So that will be your 1,75,000 minus 40,000, 1,35,000. 1,35,000 is the quick asset. So now let's put the value of quick asset here. 1,35,000 divided by current liability is 80,000 equals to, now divide by 80,000, that is 1.6875 is to 1, or you can also write times. Okay, so now you have found two ratios, current ratio and quick ratio. Now you have to find receivable turnover ratio. Calculation of receivable turnover ratio. So receivable turnover ratio, shortly you can write RTOR, equal to, here receivable is here 60,000 and credit sales is here 2,75,000. So let's put the formula: sales upon account receivable. So here sales is 2,75,000, which is divided by account receivable 50,000. So your value will be here 5.5 times. This is your receivable turnover ratio. Now after finding receivable turnover ratio, you have to find inventory turnover ratio. calculation of inventory turnover ratio. So inventory turnover also you can write ITOR, inventory turnover ratio, ITOR. Here inventory turnover is equals to sales upon inventory. Sales upon inventory. So here in this question, gross profit is not given, so you can use directly credit sales as a sales for calculating the inventory turnover ratio. So here sales is credit sales here, 2,75,000 divided by inventory. Inventory is 30,000 equals to 9.167 times is the inventory turnover ratio. Now the last one, average collection period. So this you have to find. So average collection period is also called as days sales outstanding. Okay. So now let's find the value of average collection period. Calculation of average collection period. So here average collection period shortly you can write ACP, or you can also write days sales outstanding. ACP you can write here. Average collection period equals to account receivable into days in a year divided by credit sales, annual credit sales. You can also write here annual or credit sales. It's the same thing here. So here now let's put the value of these items. Account receivable, it's here 50,000. Days in a year is given in the question, 360. And annual credit sales or credit sales, it's given here 2,75,000. 50,000 into 360 divided by 50,000 into 360 divided by 75. So 65.45 days is the average collection period for the KB Enterprises. So in this way you can solve this problem. So if you like my videos, please like, share and subscribe, and also share with your friends.